and welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. One of the closest followed stories here in Poland today is the euro to zloty exchange rate. The zloty is at 4.17 to the euro, the strongest it's been since 2017. And by the looks of it, it will carry on appreciating for a while longer. We want to demystify how the zloty has got there and where it might be heading, and more importantly, what this state of affairs means for the broader Polish economy. Joining me today is Marcin Mrowiec, economist at the Business Center Club. Hello, and thank you very much for joining us on the show today.
Good afternoon, ladies and gentlemen.
So given the current geopolitical situation, has the recent zloty appreciation surprised you? And perhaps for our viewers, we could get a visual of where the currency is at the moment.
Actually, I wasn't very surprised since at least half a year I was pointing to the situation that we were nearing at that time, that we have a pretty strong economic growth which will accelerate this year, and we have one of the highest interest rates in Europe, and this combination will likely yield stronger zloty. And on top of this, there are statements from the president of the National Bank of Poland, who at some stage, let's say a month or so ago, said that there might not be any rate cuts throughout the whole year. This was another factor that pushed zloty stronger, and I think that we will be marching this path in the next couple of months.
And we also hear that the zloty is strengthening and investors have been positively responding to our region. We also hear that there is maybe a peace deal on the horizon in Ukraine. Do you see that Poland may be able to benefit from this?
Well, it's a good question if this is going to be beneficial for the economy, and we shall cover it later. But the point is that on top of the positive macroeconomic situation, we most likely, because this seems to be in the works, this was one of the promises of the new president of the US, should there be some sort of a peace agreement in Ukraine, this would be a positive sign for the region. And if we consider the region, the zloty is the most liquid currency in the region. So almost automatically, we should and we will likely see further acceleration on top of this geopolitical trend.
And now moving on to perhaps things that are happening in the country. With the zloty appreciating with the way it is, what is the outlook for the Polish exporter? Just keeping in mind that in 2023, for instance, 51.6% of Polish exports was actually paid for in euros.
Well, I think that the exporters will find life more and more difficult as months of 2025 pass by, because they will have to manage shrinking margins, and they are already confronted with the situation of increasing wages in Poland. This is good news for the workers, but for the companies, they are getting a negative impact from higher costs and lower revenue as calculated in zloty if zloty gets stronger and stronger.
So that is a double squeeze for exporters. And I wanted to ask you about this pain threshold for exports, because this is something that is quite, important. How long do you think the zloty can actually carry on at this rate, assuming that it strengthens even more? What kind of timeline are we looking at? And there's a visual for our viewers.
Well, my thinking is that we shall see strong zloty at least till the middle of the year, and I think that we can see levels like 380 for the euro zloty and maybe even 350 for the dollar zloty, and this is going to be below the pain threshold as painted by the latest National Bank of Poland figures that you quoted previously. If we take into account that the survey was made in December, I have looked at the December average exchange rate of euro zloty and the dollar zloty, and I have calculated, given the numbers, how much out of this pain was the exchange rate in December. The numbers would likely be 395 for the euro zloty, and I'm assuming we can go as low as 380. And 370 for the dollar zloty, and I think we can go as low as 360, maybe even 350. So I think that we will be significantly below those pain thresholds, and this will be painful time for the exporters. The good news is that the economy has a self-correcting mechanism. So if it gets too strong, I think there will be a reaction from the National Bank of Poland and in particular from the Monetary Policy Council. I think they will be kind of forced to cut rates. Interest rate cuts are anticipated, but I think that they will be pushed.
Okay, let's talk about that later. Before we talk about intervention, I just wanted to talk about Polish businesses, that sort of more practical impact of what is happening right now. If indeed this is what happens as you foresee, how much longer can Polish businesses carry on? What will happen to regular Polish businesses? Because we already see that some companies are already relocating to places like Romania, like companies like Michelin.
I think there will be more and more pressure in this direction, and the companies that are working on thin margins, they might be pushed below their comfort levels this year, and they might decide to relocate their production outside. But I don't think this is going to be, the end of the world for the whole economy. If you consider that wages in Poland are still significantly lower than, for example, in Germany, there is still a good part of production, especially done by big multinationals who are taking advantage of low labor costs in Poland and higher selling prices in Western Europe. They will survive, but I think there will be a growing divide between those big companies who are working multinationally and who can compensate drawbacks in one country by positive sides in other regions. And the pain will be especially felt by local domestic smaller companies who will not have all those areas for compensation.
Does this mean that these businesses will have to shut down?
Not really. I mean, this is, there is hardly any business in Poland that derives 100% of revenue from exports. They will simply trim down their exports volumes, and they will have a lower margin or maybe even negative margin on exports, but they will still have thriving domestic markets to profit from. So this is not the death sentence for them. This is just the message that they will have a difficulty in the international markets.
So this will be the year that Polish exports will most certainly go down. Is that what you're saying?
I'm not saying it will go down, but I think that the increases will be insignificant, and actually it might even go down if you consider the previous year where the zloty was stronger. Still, looking at the whole year data, year-on-year terms, we had a slight decline of slightly more than 1%. So, but this was the combination of this was mostly driven by the weak business activity in Western Europe. And this year it seems that the business activity in Western Europe will be stronger, but at the same time the zloty will be stronger, and we shall see to which extent those forces will counterbalance and which will prevail.
Okay, now moving on. How and when might the National Bank of Poland actually need to step in and intervene in the situation that we've been talking about? And what kind of tools do they have?
The basic tool that they have is the level of interest rates, and high interest rates are one of the key reasons and one of the key magnets attracting capital to Poland. And the recent communication, especially from the president of the National Bank of Poland, was a bit surprising in that he said that there might not be any cuts throughout the whole year. At the very recent conference, he kind of softened his view, and I think he will have to soften it even further. And my scenario is that they will be forced to cut interest rates in the second quarter of this year, and I think this is going to be a significant move. My basic scenario is just one cut by 75 basis points.
Mm-hmm. And is it possible that this new strong złoty could possibly be the new normal for Poland? And how does this align with the 4% GDP growth forecast and also the government's ambitions to invest in economic development on all fronts, AI, energy, logistics? How does this come together given this scenario that we have?
I think that we will have a period of a couple of quarters of a strong zloty, but at that time we will have a growing imbalance in the current account deficits. In simple terms, imports will prevail over exports, and the current account deficit will grow. And the usual market response to growing current account deficits is weakening of the zloty. So we will see some kind of a pendulum with zloty strengthening for the next couple of quarters. But the more it strengthens, the more it hits into domestic businesses, and the more it promotes imports, the higher the deficit is going to be, and the stronger the counter reaction a couple of quarters down the road.
And theoretically speaking, what exchange rate level would be optimal for Polish trade interests?
There is a very huge literature on this, and it is hard to arrive on one particular number, or to be more precise, it always depends on the assumptions that you take. My take and my sense would be that the exchange rate of around 4.20 is a good balance, and this is what we saw for the most part of the previous year. But right now we are getting out of this balance towards too strong zloty.
Mm-hmm. And theoretically speaking, just to give a balanced picture of what's happening, what would it take for the złoty to weaken against the euro, and why?
Well, one reason I just named by saying that the more the current account deficit grows, the stronger will be the force that will weaken the zloty in the future. Another point is that the more the interest rates will be cut, the less magnet the interest rates will be for investors to flow into Poland. And third, what I'm the scenario that I'm afraid of is that after a couple of quarters of strong growth propelled by the EU flows, at some stage, the wages will grow too high in Poland, and our competitiveness will erode also due to this too strong zloty. And at some stage, the growth will slow down significantly, and this will be a trigger that will push out foreign investors.
Okay, Marcin Mrowiec, thank you so much for joining us today. Thanks for your insight.
Thank you very much.
And we got all that insight from Marcin Mrowiec, economist at Business Center Club. Thanks so much for joining us today. I was your host, Marie Kato. Join us every weekday for Business Arena at 5 p.m. CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.